June 13th, 2025. I only traded half the day today. As I've mentioned, I'm moving this weekend, so I've basically just been packing up my place, but I only traded the first half of the day today. Starting off of the day, we had bars 1 and 2. What's really interesting when you get a big gap like this is you have to look at how the market reacts to the gap. And if the bulls are going to close this gap, they're going to have to reject the gap. And, the way I think about the best way, the best thing you can see to make you think that the bulls are rejecting the gap would be if we had consecutive bars that looked basically exactly like 78. Strong bull bar closing near its high, strong bull bar closing near its high. That would tell you that traders are rejecting the gap. To me, 1 and 2 is not showing me that the bulls are rejecting the gap. It's a big bar for sure, and it's probably going to get some sort of second leg. But 2 is a smaller bar, an inside bar, and there's tails on the top and there's tails on the bottom. If you're going to be buying closes after a big gap down, it should be closes that are basically perfect bars. Otherwise, odds are that the gap is going to get a second leg down because you can think of a gap as a big bear bar. 3 and 4, good enough for the bears. Should get at least a little bit more sideways to down. Okay to be short selling the close or sell above bar 4, expecting a second leg down. And then you can see 1 pull back, 2 legs down, pull back, 3 legs down, and then this is a third leg down. So I did not take bar 11. I thought bar 11 was probably leg 3, and so it doesn't make a whole lot of sense to be short during leg 3. 12, climactic bar, bottom of a bear channel. You can start looking to exit your shorts relatively soon. Not necessarily at the market, but above a bull bar, like 13 or 14. 15, a good looking bear bar. It's a little bit of a difficult situation because we might go back down and test the bar 12 close. 15 is a really strong bar, but 13 and 14 are really strong as well. So it's a bit of a difficult situation. Again, to this point in the day, I had not done anything. 16, 17, 18, okay to buy the close of, 17, 18, 19, okay to buy the close of 19. I thought that we might test back down to the 16 high because, this is a bad signal bar. And this is the first close above moving average. So I didn't really, I wasn't necessarily eager to be buying the close. By the way, if I had sold this, I would probably get out after this bar. This is a big enough surprise that you should just exit above the bar. You take a small loss, but it's probably better than whatever's about to happen. This might pull back simply because this is pretty strong, but it's a late leg. And when you get some sort of surprise against you in a late leg, you should just get out of the market. So if I had sold for any reason, I would get out above 65. Because even if it tests back down, it's really not worth staying in. So I did not buy the close of 19. I thought we were a little bit too high in a potential range. I instead waited to see what the follow through would look like. 20 was follow through. Had I stayed in the trade, had I bought the close, let me rephrase. I did not buy the close, and if 20 had closed on its high, I was going to buy the close of 20. But 20 did not close on its high, so I placed a limit order at the bar 19 close, and I basically got long during bar 21 around the bar 19 close. We've been outside up bar and good follow through on 22. This is a really good bar. On the close of 23, I bought more, and I ended up exiting everything essentially 2 ticks below the measured move. Or I used the leg 1, leg 2. So basically it ended up being like a point above the 23 high. So it was somewhere up here that I exited. So I bought this close during 21, and then I bought more on the close of here, and I got out up here. This is still a 3-bar micro channel, 21 through 23, and it's still probably going to get another piece up. We did break out above the bar 1 high during bar 24, so it's a possible leg count reset. We might need 1 or 2 more legs up. So for me, I waited for 26, and if 26 gets follow through, then the breakout might be failing, so you can just get out. So I bought the close of 26, and I got out at the 1R target up here. So I bought the close of 26, and I got out up here. I saw 29, but although they're good bars, it's not really worth taking that trade. You're buying really high in a range, so I decided not to take 29, and that is basically when I ended the day because I was up pretty good, and I didn't really want to trade up here. I would have looked to sell a reversal. So had I bought 29, I think 31 it's probably best to get out on the close of 31. You're buying a late leg. Yeah, maybe you'll get a bounce. You'll probably get some kind of bounce, but it's not really worth sitting in the trade. So if I had bought, I would have exited most likely on the close of 31. You could wait for one more bar to see if the bears get one more bar, but it's probably also okay to get out. 32 or 31, 30, sorry, 32, 33, 34. Very late leg. It's leg four signals in a row. I would get out. I would not take this trade. 35, 36. It's a breakout with follow through. So probably going at least a little bit lower. Maybe we get back down to this low. Like I said, though, if I had taken this and I get this bar, I'm not sitting in this trade. It's just not worth it anymore. It's still probably, high probability. You can still say that the bears will probably get a symmetrical second leg, but the probability is no longer high enough for me to sit in the trade. Once we get something like this, the probability changes with every bar. 40, so we have 3-bar micro channel and then a big bull bar. After these 3 bars, it is big, small, big, so we might get a pullback. But after these 3 bars, this is most likely a bar that's trying to bail out the bulls who are stuck. Bulls who bought for any reason. These 3 bars are going to get tested somewhere down here. So this is probably just trying to bail out the bulls. And you can see they exit 42. That's that midday reversal. You can take it for a swing. I would personally rather wait for follow through. So 43 looks a lot better to me. You can sell 43. It doesn't really get much better as far as 3-bar micro channels than 42, 43, 44. Like I said, I was not sitting at that point in the day. So I did not take it. But if I was sitting here at that point, I absolutely would have sold the close of 44. And you get 1R. We have a 5-bar micro channel down. So the first reversal up is going to fail. As 47 is rallying, you can just sell the market. And if 47 closes on its high, you can just get out above 47. And if it doesn't close on its high, obviously you should get a second leg down. Odds are when you have 5 bars in a row like this, we're going to get below the bar 46 low. The 16 high was a magnet simply because of the fact that it was the bad signal. Like I mentioned earlier, I was hoping to buy a deeper pullback and how strong these bars are. So I think we're probably getting back to this high. And you can see we did end up getting back to it. And obviously the 12 low, traders who sold all the way down here, they end up getting bailed out. So you can sell all the way up, get a second leg. Some traders exit below that low. 55, 56, 57. Starts with an outside bar, not ideal. You could sell the close of 57 though. 58, another bear bar, but a large tail, but it's still immediate follow through. You can sell above 58. If I was sitting here for this, I probably would have sold the close of 57 or I would have sold above 58. And then 59, low one short. Some bears might take it. 60, 61. Okay to sell 61. I have no problem with selling it. But it's a breakout below this low. You're looking for follow through and then a retest. You get the retest 63, 64, and then you want it to collapse back down. So 65 is the exact opposite of what you wanted to see for this breakout. And now it's a 4-bar micro channel against you, and you're sold a late leg, and you have a 4-bar micro channel against you. So yes, we'll probably test somewhere back down, but I would, it's just not really worth it to be short anymore. And you're going to, get out around break even if you're exiting at the close of 65 or the close of 66. If you exit in either one of those, you'll take a very small loss, but it's okay. It's better to take, the more you do it, the better you get at just you'll take a few more small losses, but you're not going to take those massive losses almost ever. And, that's basically the name of the game, that you're trying to learn how to avoid those. My win rate's still around 70%. It was like 76% when I was taking the big losses. I was okay with taking them, but the losses were so large. And, my win rate, it was good this week. I think it was it was just a good week. But my win rate's about 70% right now, but my losses are very small and my wins are, the same size, if not larger than I'll check. So my win rate has dropped. I think 70. I'm not sure it's going to consistently stay at 70. It'll probably be in the 60s. I would imagine next week. But okay, so my win rate, I lied. It's not 70%. It's 66.67% this week. This month it's 70%, but this week it was 66.7%, and I was winning 1.4 times. My wins were on average 1.4 times the size of my losses. So my win rate dropped about 10%, but I'm very willing to sacrifice that 10% because my wins aren't 4 times the size of my losses. Sorry, my losses aren't 4 times the size of my wins. Now my wins are bigger than my losses. So it's okay to take that trade off. And like I said, This is going to happen sometimes. You're going to exit and then it's going to go back down. But I don't care. I'll just take the small loss. It's not doing what I want to do. 4-bar micro channel against me in a late leg. I'm getting out. Still a high probability trade is the thing to keep. That's hard to keep in mind. See, we're selling off towards the bottom of the bull channel. It's still a bull channel. It's the first trend line break, so should get bought up and then get a second reversal down. The weekly chart, 3 or 4 legs up, will probably trigger below this bear bar, I would imagine. And the monthly chart, not super relevant quite yet. I don't see a world where we don't test the April high. So we should at least get to the April high. That's a signal bar. So very likely, again, if the bulls get a big follow through bar, then maybe we don't. But I do not think that June is going to be a giant follow through bar for the bulls. I think we are coming back down to this price and probably the close of the bar. I mentioned, all over here that I thought we would test 5,000. We did. We just haven't spent a lot of time around 5,000, and we usually spend a lot of time around the big round numbers, and we haven't done that. So, all right, that is going to be it for this video.